We saw a really strong set of numbers, and just touching on the gross profits, the gross margin side of things, we saw that expanding to 14.1% from around 13.2%, from around an earlier number of below 13%. So we're starting to see a significant increase. Is this as good as it's going to get, just above 14% on margins?
Well, historically we come from, but that's almost a decade ago, we come from mid-14s, close to 15%. In the last 3 years we've had a good return to operating leverage post 2008, 2009. This is our third back-to-back year now of gross margin improvement, and it's coming as a consequence of two or three themes. Our increasing globalization in terms of business geographic mix, a better mix in our technology and services, and I guess there are also some sort of secular themes in our industry. Networking, communication, security, many of the areas that we touch are remaining robust even in these more challenging economic times.
And of course you are operating within 42 geographies, 42 markets, so you basically diversify your risk. We've seen Asia Pacific and the likes of India and the Middle East performing quite well. We saw quite high performances coming through there, but Asia Pacific, we're actually starting to see smaller margins coming through there. What kind of mix are you planning to see going forward with regards to the emerging market space, the high growth areas relative to the developed markets such as the US and Europe?
Well, 4 or 5 years ago, North America and Europe accounted for over 90% of our revenues, profits and people. This year, in the last reporting period, 35% of our revenues, profits and people are from the rest of the world outside of North America and Europe. So that's an increase of almost 3 times. Star markets for us remain Brazil, Middle East. We've had another strong showing, and Australia, which was weaker towards the end of the last year, has bounced back quite a bit this year. And then we're spread in a number of countries throughout Asia, and all have performed relatively well in this first half, and they've compensated for the slower growth that we've seen. We haven't seen contraction in Europe and North America, and we're not expecting to, but obviously growth there is much lower.
Well, as you mentioned, the emerging space now contributing around 35% to the overall revenue. Are you going to beef this up even further?
Well, if current conditions continue, the weighting of emerging and developing markets will go up by virtue of the fact that their growth rates are higher. Never mind any M&A activity. Strategically, most of our M&A activity is aimed at those markets as well. So you'd expect to see that grow to maybe 40% of our overall mix in the next 12 to 18 months.
Of course, we've actually seen quite a few acquisitions in the past period. How have you bedded those acquisitions down, and can we expect more acquisitions down the line?
Yes, we're quite incrementalist in our M&A activity. We tend to do, a single transactions, digest them, integrate them, and then move on to the next one. We did one in the first half. We're looking at 2 or 3 opportunities at the moment, as I say, in Asia mainly. We do think that Europe and the US tactically may offer opportunities now as markets there continue to struggle for perhaps longer than people expected, and we've often been a consolidator in times like this.
Let's touch on Westcon, accounting for around 74% of the group's revenues. We saw quite a strong performance coming through there. With regards to this business, and again we were alluding to the Asia Pacific and the Middle East and India performing quite well, but it seems that Asia Pacific is still having lower margins. What can you do to change that margin scenario within that region? Oh,
that's mix. So we're relatively small in Asia. We want to increase our weighting there, and we have a lower services mix in Asia than we do in other parts of the world. So that dial will most probably change as a consequence of further M&A as we balance the product versus services part of our business going forward. We also had a strong performance, it wasn't specifically noticed, but we also had a strong performance across emerging Africa and South Africa in the last 6 months as well.
Giokos, also one of the strong performers there, accounting for 25% of the group revenue. Gross margin slightly lower at 22.4%, but it's still very much into high digits. What contributed to the slight drop there?
Slight drop there was we had poorer professional services utilisation in the US and the UK. Not surprising given the more challenging conditions in those markets, but the star performance came from Brazil once again, which more than compensated for the lower growth that we saw in North America and Europe.
Yes, if I could just jump in there. I mean, you're mentioning, you know, increasing your geographic footprint as the years progress on. It's being done via M&A, it's being done via organic growth as well. When it comes to competition out there, what kind of competition are you actually facing, and how are you rating barriers to entry?
Well, interestingly enough, we think in this period that we've just gone through, it's maybe been evident in the last 6 to 9 months that we've most probably, well, we know we're increasing our market share. And I think you see this another large company reporting there's a bit of a sort of safe haven or commercial safe haven dynamic going on at the moment, that large suppliers and manufacturers like Cisco, IBM and myriad of other technology companies would rather deal with companies that they perceive as safe credit, especially as we're a large supply chain intermediary in terms of taking products to market all over the world. So that's one dynamic. On the other side, in terms of customers are increasingly nervous about who do they sign long-term contracts with, especially when it comes to services and follow-on support. So we think we're picking up market share as a result of our scale, our increasing globalisation, and as I said before, a lot of large companies are performing pretty well. Results in our sector have been quite robust in the last few weeks. If you look at telecoms, software, IT companies in general. And as I said before, I think there's some of the themes in our industry that support, you know, robust internet growth, more users, communities and businesses are becoming online, the explosion in wireless broadband data and mobility, all of those themes are supporting our growth.
Great stuff. Jens, also taking a look at some of the detractors when it comes to what Datatec's role is going forward. Some would argue that you are basically a Cisco provider, but we know that you're also starting to delve into other opportunities, cloud computing, of course, being a very big issue on a global level, and it seems that many people are jumping into this space. What is going to differentiate you within the cloud computing space?
Well, firstly, providing Cisco products and the services that we provide ourselves to augment that is virtue of the fact that Cisco is such a large player in the universe that we operate in. Yeah. The other elements of our business have grown faster in the last few years, and that's one of the things that's underpinned our mix and margin growth. In terms of cloud services, there is a trend underway, if you take buzzwords out of it, that basically, which is what cloud computing and cloud services is aimed at, is basically organisations moving towards the outsourcing of their infrastructure. And we're a participant in that. We're a participant in that from the service perspective and also from the product supply.
It seems that many people, and many companies actually, not only in South Africa but globally, are offering these services. Is it going to be a very tough environment to operate?
I think it will be competitive, and there'll be winners and losers in this this shift. Let's call it this IT shift. We happen to think that we're in a segment that will prosper from the shift to outsourced IT services or cloud computing, because more and more of your equipment as a user is moved to the premises or operations of a third party. So it puts pressure on your network, security breaches. I'm sure you must be all aware of the BlackBerry problems that we've seen in the last couple of days. So I mean, this at the end of the day is just more fuel for the products and services that we provide.